I'm Mike Epple in the 680 newsroom. This week we had a spotlight on the Canadian consumer and rising debt levels. We already know we're pretty much at record levels across the country for credit and debt, what with rising mortgage costs and just people going into debt because interest rates have been relatively low over the past several years. It has led to a consumer buying spree. Retail sales in the first half of this year hit all-time record highs. But a couple of reports this week indicated that we might be maxing out on the credit cards. TransUnion Canada said in the second quarter of the year, all types of credit rose on a comparable basis from last year, whether it was mortgage debt up by as much as 5%. Credit card debt, home equity loans, they're all on the rise. Auto loans as well. Now, the debt delinquency levels are still at relatively manageable levels. But the big question is, if, in fact, the economy were to take a downturn or interest rates go up, well, where does that leave us on rising debt loads? And in fact, Forum Research put out a survey this week that said a third of Canadians say that already with just one interest rate hike by the Bank of Canada, they're already feeling it on their finances. Spotlight on the energy market this weekend and going into next week because of Hurricane Harvey, what it's doing to Texas and the refinery and energy sector along the Gulf Coast. All those refineries were shut down Friday in advance of the storm. Could be a lot of damage. It could take a long time to restart them. We saw a spike in the price for wholesale gasoline on Friday's trade in New York because low supply, more demand, that leads to higher prices. That could have a ripple effect on the price we pay in the pumps here in the GTA in the next week's time, depending on when they can restart everything. Amazon.com will be completing its deal to buy Whole Foods on Monday, and already the biggest internet retailer on the planet is making moves to, well, lower prices at Whole Foods. Says they're going to lower prices effective immediately on consumer staples, and there's going to be a real integration here between Amazon and Whole Foods. They'll set up Amazon lockers at Whole Foods locations. There are 13 Whole Foods stores across Canada, and Amazon Prime members will get even deeper discounts on Whole Food prices. This is going to have a tremendous effect on the grocery sector. We've already seen this ripple through the stock market with the likes of Walmart and Costco and Loblaws all down over the past week as Amazon flexes its retail muscles in that grocery space. Coming up this week, we've got more big bank earnings on the agenda. Last week, we heard from the Royal Bank and the CIBC, both big banks with multi-billion-dollar profits, and both raised their dividends. CIBC saw more mortgage activity, and that sent the stock price down. We'll see what the remaining banks set to report, BMO, Scotiabank, and the TD, whether they'll be raising their dividends and reporting, again, more than $1 billion of profit each. And the Canadian dollar topped 80 cents U.S. on Friday. This coming week, that's some big economic signals which could set the stage for interest rate hikes or not later this year. We've got Canadian and U.S. economic updates, GDP reports due on Thursday, and on Friday is September 1st already, and that will have the jobs data from the U.S. labor market, and a lot of jobs expected. And the U.S. Central Bank could be raising interest rates later this year, as could the Bank of Canada. From the 680 newsroom, I'm Mike Epple for City News.